And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the day where this is Saturday, so we're not going to have any trading today. But this is the channel where we talk about foreign exchange trading, and prop firm trading, and hopefully making money doing all those things. So this also serves as my daily journal, where I take a look at the markets and see what I think is going on, and see how I think I can benefit from that and profit from that. So maybe you can pick up some ideas too. Who knows? So with that, let's get straight to the disclaimer screen since we're talking about live trades, and I live in the United States where that's highly regulated, and I think this is required by law. I think it is. I don't know. At any rate, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And this is the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And I've sustained losses of some or all of my investment capital many times in my trading journey, which began in 2009 is when I did my first account thing. And I had no idea what I was doing about the position sizing. I had a one lot trade on, I think I had $200 in the account, and double my money in one day. And I thought, this is wonderful. This is for me. And the next day I blew the account. So I said, oh, it went up. It must be going down the next day. Nope. It kept going up. Oh, well, at any rate, and I blew the account in about an hour. So it can be done that you can blow accounts. I've not blown an account since, I don't remember, 2010, 2011-ish. 2015 I blew an account because when the Swiss National Bank decided to go into negative interest rates, it caught the entire world off guard, including two brokerage firms, and it almost took down my brokerage firm. But at any rate, let's get into what we're going to talk about today, which is the today, not 2015. This is the DXY. This is the 4-hour DXY. This is I'm going to keep it in the 4-hour today because this is let's go to the daily for now. As far as the daily goes, it's kind of all over the place. About for the last 6 months, it really hasn't had any direction. You can go back to July, and it's just been in this trend right here between the green line, this red line up here. I tested that green line once and then came right back out of it. I don't know what was going on then. I don't remember. September 15th of 2025. I have to look it up and see what was going on that day. But it's just could be a good case for a mean reversion trade. But I don't actively trade the DXY. I just look for direction of what to do with this one. The euro versus the dollar. And the euro versus the dollar is starting to look very prime for a mean reversion trade. As long as it can stay in these bounds, then yeah, it's definitely a good cost for mean reversion. I made a lot of money, or made some money in mean reversion earlier this year. Then the market shifted, and mean reversion was no longer a thing. So if you're in range-bound markets, look up some of the videos that are on YouTube about mean reversion strategies. I may make one day. May release my EA for MetaTrader 4 that worked really well on mean reversion. But for now, let's get into the dollar versus the yen. Dollar versus the yen. I'm actively involved in a trade in this, and so I'm starting to kind of pull my hair out a little bit. Got jokes. At any rate, I'm upside down in the trade a little bit. Now I've got a very small position size, so it's not like hurting me or anything. But I'm in a position I don't enjoy. I went down to the 4-hour because I want to see the fib retracement on this to see what levels we're looking at. Come on. Right there, maybe? And that's, as you can see, I've got a very clear doji here for the reversal. And that has held up. Right now it looks like the 50 mark is going to be 157.85 5. Ooh, I need to consider that. Trades. Real quick. Pull this up real quick. See where my stop loss is on that. Oh, stop loss right now is, I don't have one. Should probably fix that because I started, there's a strategy that if you're in deep on a deep loss and are expecting a rebound, you go ahead and go in again at a lower price and then make up your money. You can get out and still save the trade. And that's where I am right now. I'm in at 158.8, which is way up here. And I'm in again at 158.04. It's way down here. So right now it's closing at 157.80. They're closed at 157.80, 81. No, it didn't. 150. It's pretty profitable then. Oh no, I'm in at 158.25. There we go. Just about right here. Now I did not take into account these bounds. My previous stop loss is at 185.50, which is the 50% of this move. That would be a bad place to put that stop loss. I'll probably put the stop loss below it. But I also want to consider the 157.45. I don't think this one is going to rebound as much as this one. Well, that's, and this is the other one. This is the one that I'm really deep on. This is the dragon, aka the dragon. And this one looks like it's testing the 78.6 move of that, which is sitting at 211.40. 211.35, 211.40, somewhere around in that area. So it's testing the 78.6 move. It can turn around anytime it wants to. It's about time for it to turn around. I've got myself coming in on the next trade at 211.75, which is actually about right there. That's probably coming in a little bit closer, around 211.67. I'm not going to 7 pips. On this scale of this thing, I'm not going to worry about 7 pips. But at any rate, it's right there next to each other, so that's fine. That's the trade that I'm also a little nervous about. I'm in at 212.39, which is way up here. Thought the bounce is done. I'd already lost a little bit of money on the trade, not much, but a little bit. And then my next trade has not hit yet, which is 211.75. That one has not been triggered yet. My concern is that now on the grand scheme of things, come out to I guess the hourly, the weekly, it's still an upward trend. Still very much an upward trend. It is testing the 50%, or that is the 20-day moving average on that. How about that? So we want to consider that. And it's also looking at the 20. It's about to hit the 20-period moving average on that. Now that could be considered could be the flipping point too, and also a period of heavy resistance right here at 211.50. Right now it's at 211.49. Hey, so we may get some relief on this finally. At any rate, let's go back up here. In periods of weakening dollar, you wanted to go bullish on the pound versus the dollar. So with that, we're not going to worry about right now, since we do not have a weakening dollar right now. It's just kind of flip-flopping all over the place. Again, good, maybe a good candidate for a mean reversion trade. I don't know. We'll see about that as things go on. So if this comes down to beneath this Bollinger Band, that's why I've got two sets of Bollinger Bands in here, is because it comes down below that second Bollinger Band, which is the 2-period deviation. Then that is and then you get a close below here and then a close above it. That's the point where you come back in on the bullish side of things, and just let the mean deviation thing do its work. So that's could be a candidate in the future. Right now it's not. We don't have enough market activity to do that. But then, as you see right here, this would be a position where the mean reversion strategy broke down and did not work well. You'd have to get out here. So you would be able to get 30 pips out of it. So it's absolutely not a perfect strategy. You know, it's I like trading trends anyway instead of mean reversion, because you never know when the mean reversion is going to stop. Dollar versus pound versus the yen. Pardon me, euro versus the yen again. Still has an upward trajectory. Still seeing higher highs and lower lows on the and higher lows on the daily chart. So it's still in play as moving upward, but it's again doing the same thing that the pound versus the yen is. It's testing the 78.6 move on the level on this chart. I can tell just by looking at it. That's about where it is. So it might be time to consider that, or if we get a full retrace on that move, which is it can happen. Then if we get a full retrace, then we might want to look out below and start looking for the mean reversion of the carry trade to start breaking down. Carry trade, I don't know if maybe something else you may want to Google, but the carry trade is where you've got the carry trade is where you have one interest rate higher than the other, and then you can just grab it and hold on to it. And that's the way it's been for decades. But now that Japan is finally raising interest rates, we're going to start seeing their economy go back to something normal. So this could be a major, major turning point in world economics that we're witnessing right now. And to make money on that, you'd get underneath the pound versus the yen, and underneath all the pound the yen crosses, because they are going to be coming down a lot. Let me see. It's kind of a hangover from the 80s too, the carry trade. But at any rate, dollar versus the CAD. Yeah, the 1980s, 40 years ago. Oh yeah, this is my favorite energy drink. This is Choco Grow. And yeah, let's see, dollar versus the CAD. Again, I'm not touching this one. This one's a couple of people were going nuts about this, but I don't see the magic in it anymore. I just see it going back and forth right now. It's been kind of range bound in a very tight range since the 7th. Started to perk up a little bit when it got down to here, but it's not breaking that 139.18 level right now. 139.25 we'll call it. Ballpark it there. CAD versus the yen. Again, we're watching things kind of fall apart on the carry trade side. Maybe still way too early to say that, but it did just break the 4-hour support trend line, which has 1, 2, 3, 4 touches. So it's a very valid trend line, and that is starting to break down. Maybe that's what I need to consider back here. 4-hour support trend line is not as valid. However, if I adjusted it to come up to here, it would be very valid and possibly breaking down. Be breaking down about now. What is this trend line? This is my daily resistance trend line. That turned, yeah. It's got several touches on it too. 1, 2, 3, and it is just about to cross it, about right here. That level is going to be about 211.30, so I need to watch the 211.30 level. If it drops, my stop losses are set at 211. If it comes down below 211, then it's a totally different animal that I'm looking at, and I'm going to need to flip, possibly, or just stay out of it and wait for a reversal, because it's the parabolic moves often have pullbacks, and that would be one of them. Let me see what's going on next. Oil. Talk about oil. Oil's coming down. It's very pleased to see the gas coming down at the gas pump in Maine. It's finally happening. I think we pay a lot of taxes here in Maine on gas. Pretty sure of it. Here we go. We have dollar. It's a completely different matter. Aussie versus the dollar. Not a whole lot going on there either. Pretty range bound. Not really doing anything around 67. Just kind of hanging out between 67, 66.35 and 67. Not touching it. It's trading kind of similar to the Canadian, come to think of it. Then right, Canadian versus the dollar. Gold. Gold's kind of now James Stanley's picked this as the trade of 2016, and it's pulled back for a couple days, but certainly not out of the ball game. Be happy to see that. If I were to get on the bullish side of that again, want to see that around 46.67. It's not there yet. Platinum. Again, 23.22. kind of pulling back, kind of mimics gold a little bit, but on a grander scale. A lot more volatility. Big test on silver at I saw it as low as 87 yesterday when I was checking in, and I'm not actively trading silver right now. I do buy the physicals, but it's a big test of 90 yesterday that held on the weekly close. So we could see a reversal on silver pretty soon. See that perking back up again. Silver and gold are going to be the running mates for pretty much the rest of the year. But at any rate, that's all I got right now. It's time for me to go do some other things. But if you like this video, then hit the thumbs up. Highly recommend it. If you would like to see more of these videos, then first, thank you for if you made it out this far and listen to my babbling all this far, then that's great. If you made sense of it, that's even better. If you thank you for checking out this video this far. If you like the video, then hit the thumbs up. If you want to see more of these videos, then subscribe to the channel, and we'll have more videos coming out. I've got the next couple of days off from my day job, so might be going out and doing some playing, some scenery type stuff. So you might want to check out some of our shorts too. In the meantime, one more thing. If you have any comments, by all means, please comment. I'll be catching up on those tomorrow. So bear with me on that. And with that, that's about all I got for today. So tomorrow we've got another video coming out, and I will talk with you later. Have a great one.